You're supposed to put the first 500 in the safe and lose the combination.
What is up guys, it's your boy Kev. Welcome back to yet another video, and in this video I'm going to be showing you guys a break and retest strategy. Now the very first thing that I want us to look at is how to properly draw a trend line. Now I know that a lot of people are actually struggling with drawing trend lines because sometimes the market just moves in random directions and it can be very hard to just draw your line. The most important thing that you guys have to keep in mind is that a trend line is never really valid unless it has 3 touches. When the market actually makes 3 touches, it is a very strong confirmation that the market is pushing in that specific direction. So if the market is making higher highs and higher lows, pushing to the upside and making 3 touches, that is a very strong confirmation that the market will continue pushing to the upside, and you should therefore look to take trades in that direction. If the market only gives you 2 touches, that is not going to serve as a valid indication that the market is pushing to the upside. The reason why I'm saying this is because it can also be hard to trade based on just 2 touches. So if the market is actually pushing up like this, making a higher high, coming back down, and pushing up and coming back again, this is not going to serve as a strong confirmation that the market is pushing to the upside, because as long as price does not move to the upside to confirm this rejection, anything can happen at this point. The market can actually break to the downside like this and push down. So the market has to reject this level, come back for another touch, and that's when and only when that you can actually look to trade the market to push to the upside. So it is very important that you look for 3 touches when you are drawing your trend lines, because they serve as a very strong confirmation that the market is pushing to the upside. Now with this break and retest strategy, what you're basically going to be doing is that you're going to be drawing your support and resistance levels where price is going to be breaking and pushing to the upside. The most important thing with this strategy is to make sure that price is pushing to the upside in a very clean manner. You want to make sure that you avoid the market when it's actually moving random directions like this, because it's very hard to actually determine what price is doing. When price is moving in random directions, it can be hard to predict what the market is going to be pushing next. And the whole idea of trading is to find where the market is going to be pushing next. So if price is actually making clear higher highs to the upside like this, it is very easy for us to predict what the market is going to do next. We can draw our support and resistance levels and wait for price to actually come to those levels, and that's when we're going to continue pushing with the market either to the upside or to the downside. So going back to what I was saying here, you want to make sure that the market is moving cleanly and neatly to the upside and making clear higher highs and higher lows. And when price actually comes back to support level that was a resistance level, you want to make sure that you look for key reversal patterns at these sections. This can be a pin bar reversal, an inverse head and shoulders, a double bottom, a triple bottom, and that's when you would actually take your trades to push with the upside. Another key candle pattern that you want to look for at these specific areas is a bullish engulfing candle. So if the market was actually pushing to the downside like this, and you see that you have a bullish candle that actually engulfs this one, that would be your strong indication that the market wants to continue pushing to the upside, because what this candle actually tells you is that there is a rejection. When price is rejecting a certain level, that is your indication that the market is going to push to the upside. The market will then continue pushing to the upside, break your resistance level, come back to this level, and it will give you other reversal patterns. Again, you can either look for a pin bar reversal, inverse head and shoulders, double bottom, triple bottom, or a bullish engulfing candle, and that's when you would actually push with the market to the upside. The reason why this candle formation is a very strong indication that the market is going to push to the upside is because on smaller time frames, this is actually a break of structure. You guys have to understand what these candles actually tell you, and when you see that a bearish candle and a bullish candle, and that bullish candle is engulfing that bearish candle, on smaller time frames, that is a break of structure. So on smaller time frames, you would see something like this. The market would actually be pushing to the downside, get to your key level, and start pushing up like this. So this specific move right here would actually simulate a bullish engulfing candle on a bigger time frame. So when you see this specific candle formation on bigger time frames, you should know that on smaller time frames, it is actually a break of structure, and that's when you would actually start preparing your buys to push with the market to the upside. But the overall idea behind this break and retest strategy is to make sure that price is moving cleanly in an uptrend, making higher highs and higher lows, and not moving in random directions where you don't know where the market is actually pushing. So the market has to push up, making higher highs and higher lows, and at your key levels, the market has to give you some kind of rejection. And the way in which you're going to see these rejections is by seeing your candle formations like your bullish engulfing candles, your triple bottom, double bottom, inverse head and shoulders. And that's when you would actually continue pushing with the market to the upside. In the downtrend, you want to look for the opposite when the market is actually making lower lows and lower highs. And when price actually comes to these key levels, again, you want to see your pin bar reversals or your double tops, your head and shoulders, and your triple tops. And that's when you would actually start. Now, the best way to understand what rejections actually mean on the market is to actually think of a fire. Now, the best way to understand rejection in the market is to actually think of a fire. Now, this is my fire right here. I know it doesn't look nice, but I just want to show you guys something. So when you think of a fire, whenever you actually place your hand on this fire, you would have noticed that every time you actually place your hand, you just almost instantly remove your hand very quickly away from the fire. So that is very similar to rejections within the market. These key levels serve as a fireplace. So this is a very hot place that price is actually unable to keep pushing towards and penetrating. Whenever price actually gets to this fire right here, it's actually going to reject very quickly and start pushing to the upside. The candles would almost look like they are melting when they come to this key level. That's why you actually see a lot of shadows at these key levels, because price is actually unable to break below these key levels. So you would see a lot of shadows or a lot of wicks. So these are the wicks that you would normally see at these key levels because price is unable to penetrate this specific hot area right here. So the next time you actually draw your key levels and you see candle rejections and their reaction to this specific area, you will know exactly what price is actually telling you and what to take next when you are seeing these specific formations. So when you hop onto our chart and draw our key levels, you want to make sure that you pay close attention to what price is actually doing at these hot areas, these key levels right here. If price is actually leaving a lot of wicks, it is your indication that price is unable to penetrate that level, and that level is actually a very strong level and price wants to reverse at that level. Think of the fire. If price is actually unable to break through very strongly at that area, it is your indication that that area is very hot and price is unable to penetrate that level. You would typically see a lot of wicks, a lot of slow in momentum, and that's when you should actually know that price is trying to push in a different direction. Another example of this rejection that I can give you guys is, let's go back to our fire again. So if we have a fire like this, let's say that this is you right here and you are actually running towards this direction and your view is actually blocked by this wall right here. If you were to actually run in this direction and for some reason you see that there's a fire that was blocked by this wall right here, what we all know is that as soon as you actually get to this fire, you're going to try to run away from this fire. You're going to reverse, you're going to change in direction. So if you were sprinting in this direction and for some reason you didn't see this fire, and as soon as you actually got to this level and started seeing this fire, that's when you would actually start reversing. You would change your direction. So if you were moving very fast in this direction, that's when you would actually start slowing down and changing your direction and pushing to the upside. That is actually by far the best way that I can explain key levels within the market. It is very same with price. When price is actually moving in a specific direction and price actually reaches a very strong or key level within the market, think of the fire, that's when price is actually going to slowly try to reverse because it doesn't want to get burned in that fire and move in an opposite direction. So this movement right here tells us that price is not moving strongly in a downtrend anymore. It's not sprinting to the downside anymore. It is now trying to slowly reverse and push to the upside. So this is a reversal. It is also called a rejection. That's when you would actually see a lot of reversal patterns at these areas, and you would see your inverse head and shoulders, your bullish engulfing patterns, and your triple bottoms. That is your indication that price is unable to penetrate that level, and it will now reverse and start pushing to the upside. So now that we actually understand our horizontal break and retest setups within the market, I want us to actually look at a real chart to actually see how you would actually identify this specific setup within a market and how to trade it. Remember, I said that when you are actually trading this specific strategy, you want to look for markets that are very clear. You want price to be very clear and very apparent. So price has to almost be very obvious as to what it is doing. So price has to move in lower lows and lower highs and not necessarily move in random directions, because that will be confusing for you and it'll be hard for you to draw your trend line in that specific setup. You want setups that are very apparent, that are very clear, that are very obvious, showing you exactly where price is pushing. So if price is pushing to the downside, you will see a series of lower lows and lower highs where the market continues breaking structure and pushing to the downside. And again, you want to focus on setups where price actually made multiple touches. I always say that 3 touches are actually enough for you to know that it is a valid trend line and you are going to be continuing with that trend line. So if price actually make 3 touches, that is your indication that it will continue pushing to the downside, because that is a very strong level. And if we look at what price is actually doing at these levels, you would see that price is actually making bearish engulfing candles, your reversal pin bars, because price is at a key level. Price is reacting in a way that would tell you that it is not trying to push to that level anymore. These are very strong hot levels and price is unable to penetrate those levels. So it will reverse, it will leave a lot of wicks, or it will give you reversal patterns. I don't know if you guys can actually see this huge wick right here. Price was actually pushing all the way to the upside, and as soon as it actually got to this level, that's when it started leaving a huge wick and reversing in a different direction. So that should tell you that price was in a very hot level, at a key level, and it was unable to penetrate that level, and that's when it started reversing to the downside. So when we actually go all the way to the upside, you can clearly see that price was making lower lows and lower highs, and as soon as price actually broke those levels, you would see when I actually stretch out this line like this, price got to these levels and started reversing. So we have a break and a retest, and price started pushing down. When we go further and draw this level like this, you'd see that price actually broke and it retested, and at this level you would see your rejection. You would see how price actually reacts to that hot level. It will give you bearish engulfing candles, your double tops, triple tops, or even head and shoulder setups, and continue pushing to the downside. Again, when we continue drawing our levels, price actually came to this level right here. It didn't necessarily touch, but it came to this order block right here, and that's when it started reversing to the downside. So the whole idea behind this strategy is for you to actually draw your key levels and wait for price to actually come to those key levels and show some kind of rejection at those levels. So price has to break a level, retest it, and that's when you're going to continue with the market to the downside. But first, you have to make sure that your trend line is drawn correctly and it is neatly, and price is moving in an apparent movement. So price is obviously making lower lows and lower highs, and that will be easy for us to predict where price is going to be pushing next. As soon as price actually gets to your key level right here, that's when you want to pay close attention to how price is reacting at these levels. It has to give you a lot of wicks, a lot of rejection to show that price is unable to continue pushing in that specific direction. Now, our diagonal break and retest setups would typically look something like this, where you actually draw a counter trend line and the market actually breaks that trend line and comes back to retest that level. A lot of people call it the last kiss. When the market actually breaks your trend line, comes back to your trend line, retest that level, and that's when it would actually start pushing to the downside. This would also be a touch of your resistance level, and you would take your sell at that specific level and push with the market to the downside. Again, you want to make sure that you look at what price is actually doing at that key level. You want to see some kind of rejection to actually tell you that price is unable to push in that direction. When we continue with the market, we can clearly see that we had another mini uptrend right here where price actually broke impulsively to the downside, and when it actually came back to this level, that's when it retested this key level, and you would take that as a sell. And that also simulates a head and shoulder setup, as this would be the head, the left shoulder, and the right shoulder. And when price actually came to this level, that's when it retested and started pushing all the way to the downside. We have another counter trend line right here where price was actually moving to the upside. Price broke that level, came back to this level, and it came to our key level. Remember what I said about rejections? Price would typically leave a lot of wicks at this level because it is unable to push or penetrate this level. This level is very hot, and price will indicate its reversal by leaving a lot of wicks and a lot of shadows at this specific level. So we can clearly see that price actually broke this level, came back to this level, and it retested. It was unable to break above it, and that's when it started reversing to the downside. And this is how you actually trade your break and retest setups within the market. Again, everything ties into understanding how to draw your trend lines, how to identify your reversal patterns, and just letting everything come together to tie into a very strong confluence for you to be taking that specific trade. Price has to be moving in a very nice downtrend where it's making solid touches, 3 touches at least, break either your support level or your resistance level, come back to that level, retest and show some kind of rejection, and continue pushing in that direction. When you are dealing with a diagonal break and retest, price would actually be moving in an uptrend like this, break that specific trend line, come to your trend line, simulate a head and shoulder setup, and that's when you would actually be taking your sell to push with the market to the downside. And this is simply how you actually trade your break and retest strategy. I hope you guys actually gained a thing or two from this video. I tried my best not to make it too long so that you guys understand, but of course, if you guys have any questions, feel free to leave a comment and I will make sure that I check it out. And do subscribe if you are tuning in for the first time. Leave a like and I'll catch you guys on the next one. Peace.
You're supposed to put the first 500 in the safe and lose the combination.